Financial accounting. We've been talking about the accounting equation. For a corporation, that's assets equal liabilities plus stockholders' equity. If I'm a sole proprietorship or a partnership, it's called assets equal liabilities plus owner's equity, or ALO. But because we're a corporation, we have stockholders, which means that our external investors hold shares of stock in our business. What I want to talk about in this short segment is how the accounting equation always stays in balance. So, for example, if I have assets of $100,000 and my liabilities are $80,000, can you tell me what stockholders' equity has to be? Well, it's $20,000, isn't it? Because the accounting equation always has to stay in balance. Let's try another one just to make sure you've got it. What if assets were $180,000 and stockholders' equity was $70,000? Could you tell me what liabilities are? Did you say 110? You're right. Well, that seems pretty straightforward and simple. So let's make it a little bit harder. What if we look at the balance sheet, which is the accounting equation? I shouldn't have said that yet. More on that later. But what if the accounting equation at the beginning of the year was $100,000 and liabilities were $60,000? What was owner's equity or stockholders' equity at the beginning of the year? Did you say 40? And then, what if at the end of the year we took another snapshot of the company's financial health? Because remember, this accounting equation is at a moment in time. So this is the snapshot, January 1, strike of midnight. What if on December 31 of that year, we take another snapshot of the financial health, and it shows the following. We have assets of $180,000. Our liabilities have risen to $90,000. So what is our stockholders' equity at the end of the year? Did you say $90,000? So, as you can see, we can come up with the accounting equation at the beginning of the year and at the end of the year. But what would be interesting is to know what was the change. So let's look at the change. And delta, remember, means change. So how much did the assets change? The assets changed $80,000. How much did the liabilities change? The liabilities changed $30,000. They went up also, didn't they? And how much did stockholders' equity? Well, they also went up $50,000. So look at this. Not only does the accounting equation balance at the beginning of the year and the end of the year, but the change also balances. So notice the change of $80,000 is equal to the liability change of $30,000 plus the stockholder equity change of $50,000. Now let's try one more just to make sure you've got it. Beginning of the year, assets are $100,000. Liabilities are $50,000. So what's stockholders' equity? Did you say $50,000 as well? You're right. What if at the end of the year we had a balance of $120,000? Liabilities fall to or go up to $60,000, and then what's stockholders' equity? Did you say 60 as well? You bet. So as far as the change, notice the $20,000 change is equal to a $10,000 increase in liabilities plus a $10,000 increase in stockholders' equity. Isn't that great? So the accounting equation, moment in time, financial health of the company, whether it's the beginning of the year, end of the year, or the change during the year.